Check your wallet right now. I'm willing to bet that you either have a Visa debit card or a Visa credit card in there. And if not, then you almost certainly will have a Mastercard. These two companies form the duopoly that is our global payment system. And even though they were originally founded as not-for-profits, they're now absolute cash cows, and since IPOing, their shareholders have had amazing returns. So, as part of this channel, I like to explain why I've made changes to my portfolio and show the changes transparently. This week, I decided to purchase £3,500 worth of Visa stock, and today I want to explain why I think this stock is going to be a great future prospect and why I specifically bought into it this week. So what about Visa's business model makes it so undisruptible? What's its moat, and how does it make so much money? Visa effectively acts as a network for connecting buyers and sellers' banks. So when you hand over your card with the 16-digit card number, it has the routing code of your bank account in it, and it allows the bank of the seller to contact your bank and get the money that's required. As a part of this transaction, Visa will take an interchange fee, which is generally either a percentage of the total transaction or a fixed amount plus a smaller percentage. Now, these can vary a lot depending on whether the payment is a debit or a credit card. The nature of the card payment business makes it a really difficult one to disrupt, as if you're a new business trying to disrupt Mastercard or Visa, you would one, have to develop your whole payment network, two, get banks to actually use your card, which takes an exorbitant amount of money. In fact, the vast majority of the operating costs of Visa and Mastercard is client incentives. That's money being spent on convincing banks to use their particular card and not a different networks. And there's no reason for a bank to switch to a new network that's unproven when they could just as easily either use Visa or Mastercard. In addition, the technology is simple. It dates back to the 50s, so you can imagine now that with the computing power that we have, it's very, very easy to operate, and the operating costs are minimal. If we look at the income statement of Visa, this graphic helps us visualize the main streams of income that Visa gets. So we can see the three here are for services, data processing, and international transactions is also a major one. Its gross revenue is around 10.9 billion, and then it ends up spending more than 50% of its spend on client incentives, like I said, in order to keep banks using their network. But if we look at the actual network fees, the costs of actually running the network, they're only 200 million. It's absolutely minuscule in comparison to the rest of the expenses. Then we have the general operating expenses for the personnel costs, marketing, and they're all very small. And overall, the net margin is a 53% profit compared to the net revenue. That's a really, really good statement. And if we compare it to Amazon here, we can see here that every time Amazon creates $1 of revenue, it ends up having to spend so much of it on various different operating costs and general expenses. Visa is not a business like that. Over 50% of the profits go straight back into the shareholder's pocket effectively. That's the type of business I want to own. Despite there being years of various different technologies being purported to be the next Visa or Mastercard killer, the app that will wipe these networks off the face of the earth, it has never actually happened. If we look at the example of PayPal or Apple Pay, they both ended up using and working alongside Visa and Mastercard. It shows the strength of their moat, where technologies that were meant to replace it end up working with it, and its stranglehold over the payment industry continues. The main winners from the duopoly in payments are Visa and Mastercard, the banks who are able to market their cards with reward schemes to consumers and also take a percentage of interchange fees, and also consumers who are able to get really good rewards programs on their credit cards. And 85% of Americans own a rewards credit card. On the loser side, though, are low margin retailers such as Target, Home Depot, Walmart. All of these companies make very low margins. Let's say, for example, they make 5% profit margin. If they're having to pay a 1 or 2% fee in interchange fees to credit card processors, it massively eats into their profits. So they definitely are lobbying and have got a movement in Congress to try to limit the interchange fees paid by retailers. And I personally think that that's not going to be good for consumers, as everyone loves rewards, and doing this will limit them completely. I live in the UK, where regulation has limited the amount of fees that interchange fees can be charged on each transaction, and the reward schemes here are awful in comparison to America. Even though there is the potential for US credit card interchange fees to be lowered and limited by Congress, I still believe that even if this does happen, there is a runway for growth in the company. That's because in 2022, over 50% of transactions were still done in cash. And as the older generations start to fade away and the younger generations become more prominent in terms of spending, that's only going to increase the percentage of card transactions, which means there's a huge runway for growth, as I said. In addition, with inflation being so high, with the business model of Visa to take a percentage cut of every transaction, the rising cost of each transaction made in the economy will just be further revenues for Visa as a company. So in my portfolio, I currently hold a few shares of Mastercard already. It's a small position, but I do think the company is really good. Why did I choose to invest into Visa rather than expanding my position in Mastercard? Well, the answer is simple, really. Valuation. I personally think that Mastercard will do really well as a company as well as Visa, but I do think that a little bit too much growth has been baked into the share price. So Mastercard has had revenue growth, which is slightly higher than Visa, maybe 1% or so over the last 10 years. But if we dig further into the numbers, we can see here that the earnings per share for Mastercard was around 16.6% for the last 10 years, whereas if we look at Visa, the earnings per share were 26.65% over the last 10 years. And it's a similar thing when you look at the free cash flow per share. Visa is nearly 20%, whereas Mastercard is only 16.8%. And meanwhile, the PEs of the stocks are very favorable for Visa. Mastercard's forward PE is around 29, whereas Visa's is around 25.6. So a higher free cash flow growth rate and a higher free cash flow yield, higher dividend yield, and the ability to buy more shares back per year because it has a much bigger net cash position. All these things combined make me think that Visa is a better stock buy right now in the market than Mastercard, although it is a very close call and I wouldn't be opposed to putting more money into Mastercard either. Visa's share price has been hovering around the same figures for the last 3 years or so. If we look back to 2020, right before the pandemic hit, the share price was only around 8 to 9% lower than what it is right now. And that's because there was such a huge period of growth for the decade preceding that. I think that the share price potentially overran the fundamentals of the company, but now after a 3-year pause, the fundamentals are so much better and there's potential for a breakout period, in my opinion. Look at the adjusted free cash flow figures per share for 2019. It was around $5.31 per share, whereas now in 2022, it was $8.27 per share, which is over 50% higher. The growth of the company in fundamentals has continued, whereas the growth in price hasn't. And that's sometimes the best time to pick up shares in a company. So those are the main reasons why I bought into Visa. I don't think that my initial purchase will be my last. I really want to build this position to be one of the largest in my portfolio. And I'll be looking to potentially trim some of the others that I'm not as big a fan of. One of the quotes from Terry Smith, a legendary investor I really like, is he says, you should try and buy businesses that could be managed by monkeys. Like, it's such a simple business model that they could be managed by idiots. And that's because eventually, management teams change and you probably will have idiots managing it eventually. And I personally think Visa is that kind of company. It's such a simple business model. The technology dates back to the 50s, and yet it's going so strong since then. If you guys did enjoy the video and made it this far, please leave me a like and subscribe, and I'll see you guys next time.